Welcome back to another episode of Broke Up, Not Broken. I'm your host, Jamie Lima, and founder of Allegiant Divorce Solutions, where we help people prepare for, navigate, and recover financially from divorce. This podcast is your one-stop shop for mastering your life and your finances throughout the entire divorce process. In today's episode of Broke Up, Not Broken, we're joined by Michael Ringel, a financial professional with strategies for wealth who brings deep expertise in planning for families with special needs. With a strong focus on protecting long-term financial security, Michael helps families make thoughtful, coordinated decisions, especially during and after divorce. And we're going to discuss what divorcing parents need to know when they have a child with special needs, including how to plan for 2 lifetimes, structure child support to preserve government benefits, and coordinate estate planning with an ex. So grab a cup of coffee or your beverage of choice, buckle up, and let's once again get you financially empowered. Mike, it's so great to have you with us today.
Oh, thanks very much. I was looking forward to this for a long time.
Hey, like I said in our lead-in, we were chatting a couple minutes before we started hit the record button. We're both financial professionals, been doing this work a long, long time, both certified divorce financial analysts. And this is one area that we see all the time, but nobody talks about it. So I'm super happy to have this conversation with you.
Yeah, no, thank you for inviting me. It's something that we've been doing for a long time, and there are certain nuances that families need to think about and divorce lawyers need to think about. And so if we could educate people on, what they need to know, and it's going to be great for everybody. So I look forward to it.
Yeah, absolutely. You talk about this concept of planning for 2 lifetimes. Let's just jump into it right there.
Sure.
Right? So let's talk about that and some of your thoughts on that.
Yeah. So if you really think about it, families that we typically work with who have children with special needs, not only do the parents need to plan for their lifetime and for their retirement, but they have to plan for the lifetime of their child with special needs. A lot of times the families that we work with know that they're going to have to find money to be able to supplement their lifestyle when they're not here. And that's probably the biggest concern that a lot of families are thinking about is how do they plan for their lifetime now? Typically, the child becomes an adult and for a long time lives with the parents. But we know with 100% certainty that someday the parents are going to be here. So what has to happen next? Where's there going to be money for that child, whether it be for housing, whether it be for receiving government benefits, supplementing care. And so we find that a lot of families are so overwhelmed with what's going on in their day-to-day lives that they know this work needs to be done. They just don't make it urgent. And especially if somebody's going through the divorce process, there needs to be coordination during the process and post-divorce and checks and balances along the way that need to be thought about that neurotypical and typical families don't have to consider.
And this is an area that we, again, you and I have been doing this work for a long, long time, and we see a lot of our clients that are in traditional financial planning scenarios, right, where it's maybe, and there isn't a child with special needs involved, just this typical scenario. Even those people ignore the estate planning piece, right? Like I'm literally texting my dad right now,
right?
Tell him to get off his ass and get it going because I've been bugging him for 2 years about it, and he's no spring chicken. God bless him. He's 70 years old. Literally, this is his first week of retirement. That's why I'm texting. His first week of retirement. He still plays softball, still plays hockey. The guy's an animal. Think he's going to live. He thinks he's going to live forever. We all know that's not the case, but he's still ignoring the estate planning piece. So, it's got to be even more difficult for divorcing people.
It definitely is. And, when you go through the divorce process or going through a divorce, there's so much emotion and so much, I hate to say, a lot of hatred that goes back and forth that the lawyers are the ones that really need to take both families aside and say, look, we really need to think about, not only for you guys, we need to think about the kids. And in a typical family, most people think about, okay, the child support and the alimony, when is it going to end? But with a family with a child with special needs, that child support may never end. And that may be, a sticking point. And the lawyers have to get the clients together to coordinate the estate planning. Talking with your dad, I don't know if your mom's still around, but they have to, they have to coordinate it amongst themselves. Now, think about it. If you're going through the divorce and you have 2 people who have so much animosity against each other, that they have to start thinking about, their children and how to plan for their children. and how to make sure that money, when child support is paid, doesn't disqualify their child with special needs from receiving the government benefits that they're entitled to get. See, any money that goes into their child's name, anything more than $2,000 above the age of 18, will disqualify them from receiving benefits, including SSI, which stands for Supplemental Security Income, Medicaid, maybe Section 8 housing, maybe other waivers. So if the proper estate planning documents aren't put in place and the proper financial plan behind it, money going into that child's name could disqualify them from receiving millions of dollars worth of benefits throughout their lifetime.
It's incredible. Gigantic mistake, right? So like just to go backwards a little bit and unpack some of this, you've got the attorneys who are dropping the ball, sounds like. So attorneys need to be aware that this is something that they need to talk to everybody about, even in even in traditional settings, right? Like once that divorce is finalized, if you had a trust and a will and all that other stuff previously with your spouse, that's all null and void, right? So we've got to start that whole process over again. But especially if you're dealing with special needs, now you've got to work with your ex-spouse at this point to figure out what that's all going to look like, and then you've got to be super smart about how you're receiving those benefits, is what I'm understanding, because you're going to disqualify that child from governmental support later. Am I understanding that correctly?
Yeah, exactly. And the other thing to think about is typically what you want to do is create a special needs trust. So when it comes to estate planning, there are three options, right? You could just have wills, which leave money to, spouse, ex-spouse, or to the children directly. So therefore, if an ex-spouse leaves money to a child with special needs directly, right, that money goes into their social security number, goes into their name. Now, if they're a minor, it'll go into a trust, but either way, it's in their name. That will disqualify them at age 18 from receiving benefits. So therefore, the money needs to be moved out of their name, either into what is called an ABLE account, I'll talk about that in a little bit, or a special needs trust, right? Now, when they're going through divorce, what I would recommend, and I've seen it many times, is a divorce attorney writes into the agreement that they need to contact an attorney who specializes in special needs planning and specializes in the creation of special needs trusts, specifically a third-party special needs trust. So therefore, when one of the spouses passes away and money's left to the children, if any money needs to go to the child with special needs, it actually goes into a special needs trust. If the money's in a special needs trust, doesn't matter how much is in there, it will protect your child from receiving government benefits. So the lawyers should actually be proactive and say, you need to talk to a special needs planning attorney to have a special needs trust created. I've worked with some divorce lawyers who specifically name the attorney they're going to use.
Oh.
Right? And you don't let your divorce attorney do this, because that's not what they specialize in. And you don't go to the attorney that closed on your real estate or is your business attorney. You go to an attorney who specializes in special needs planning.
So let's talk about I have a couple follow-up questions here. Number one being, I guess on the financial side, right? Sure. We've had a couple of these cases. I have one case going on right now, which involves special needs.
Yeah.
And the biggest argument the husband in this particular case is making is that, well, like I'm paying child support all the way through to this, my kid's 18 or 19, depending on, what the scenario calls for as far as, high school and whatnot. And now I'm going to have to pay, like, how long do people have to pay? Like, is it forever, or is it till 26? Is it like what? Like, how long?
It could be. It's a great question. It could be lifetime.
Huh.
It could be lifetime, and therefore, the money that's received by the child needs to go to, or should go into, a special needs trust.
Mm-hmm.
Right? Should not go directly to the child. Right? Or when I say child, I mean, the child of the parents. I mean, the child could be 21, 22, 23, 25. I have a client who has a 26-year-old daughter with Down syndrome, and the ex-husband is paying money into the special needs trust for the daughter. Now, it's a first-party special needs trust as opposed to a third-party. Now, first-party means that the money goes to the daughter first, theoretically. Right? It doesn't have to actually physically go to her, but theoretically, it's the daughter's money. And in a first-party special needs trust, the beneficiary, the primary beneficiary, is typically the state in which you live in if you receive Medicaid benefits. So the state you live in upon the passing of that child gets first right to go after the money in the trust to get reimbursed from Medicaid. And then anything left over goes to maybe siblings or other beneficiaries. So in structuring the divorce, a first party special needs trust may be needed to be created so that the child support gets paid directly into that, as opposed to money given in the child's name. And it may be forever. And that's a lot of families that I've met who are going through divorce, and the divorce rate for families with children with special needs is higher than a typical family, is because the amount of stress, imposed on the parents. And that's one of the reasons why. And if set up properly, right, things could be taken care of. But if they're not set up properly, as you know, if an estate plan is only as good as the financial planning behind it, right? So your dad can create all these phenomenal documents, but if it doesn't make changes, he doesn't change beneficiaries, if they don't do certain things, like my parents, when they passed, they had a revocable trust as owning all their assets. So we didn't have to go to court, my brothers and I. They said who the assets went to, and we got them. Yeah. They made one or two little mistakes here, which really weren't big. But it's like you said, it's really important that this stuff gets done. And the problem is everybody thinks they're invincible, and it's never going to happen to me until it does.
Yeah. My ex-wife is a perfect example of that. Her father, who I never had a chance to meet, he had his trust and had his insurance documents sitting on his desk, and collecting dust, getting ready to be signed. And he died on the side of the 15 freeway when she was 18 years old.
Wow.
He got in a car accident and bled out on the side of the road, and that was it. And drastically changed her life because mom had to work multiple jobs to keep a roof over her head, and she was a single mom for many, many years, and a single child.
Yeah, no, that's true, and
it's just terrible that people let that happen.
It's horrible, and then there's something that you need to think about as well, which I just got off the phone with a client, and we were talking about it. A lot of the times, as you know, in the divorce process, there's life insurance, which is a financial tool to be used to cover the future payments of alimony and child support. God forbid something happens to the spouse that's paying it. Let's assume it's the father in this case. Well, the question becomes, how's that policy owned and who pays the premiums on it? The attorneys we talk to always recommend, not always recommend, but they should be recommending that the owner of the policy and the person paying for the policy should be the other spouse. So therefore, I'm going to use this case. If it's a husband and a wife, and the husband's paying child support and alimony to the wife and the kids, the wife should own the life insurance on the husband's life, and they should pay the premium. Here's why. What if the husband dies and doesn't pay the premium, and the wife never knows this? I literally got off the phone before this call with a client whose ex-husband passed away. She went to go collect the life insurance, and there wasn't any. Mm-hmm. He let it lapse 4 years ago, unbeknownst to her.
Happens all the time. This is music to my ears. I am so glad that you're pounding the table on this, because I do it myself. And I feel like it just falls on deaf ears sometimes. And for those of you out there that are in this particular situation, you're listening to this, this is your opportunity to save your financial future and your kids' financial future for basically peanuts every month. I mean, you're talking about $1 million policy on someone who's in relatively good health is what, $75 a month or $70 a month or something? Like, I think that's what I'm paying myself for $1 million policy so my kids are protected. And if somebody owes you money, alimony, child support, there's some kind of a buyout scenario, there's a business involved, whatever it is. If somebody owes you money, you should be insuring their lives, owning that policy, and making those damn premium payments on your own. And even if your soon to be ex spouse is the most trustworthy person on the planet, it doesn't mean his or her future spouse isn't going to put a bug in their ear one of these days and go, babe, I, I'm going to take care of the kids. I love them like my own. So we'll just,
Yeah.
make me the beneficiary. We'll make it super easy and I'll just take care of them. And then the next thing you know, the stuff hits the fan and she's running off with the next pool boy. We've seen this time and time again. So thank you for bringing this up.
No, I appreciate it. It hurts me when these things happen and they could have been prevented. It just does. And it's not the first time it's happened. So my message and your message is to anybody who's going through divorce is that they need to take financial responsibility for themselves and advocate for themselves, just like they do their children, that they need to be in control. And a lot of times the non-CFO spouse, non-income earning spouse is not the CFO and doesn't know what's going on, and they need to get educated. And the lawyers don't do it, right? In my experience, the lawyers, like most lawyers, they get paid by the hour. They keep the case going. And once the final agreement is done, once the marital support agreement is done, right, the lawyer's done. They're not involved in helping the clients get the money. They're not involved in helping transfer the money. They're not involved in, like we talked about, the financial planning behind it. And here's one thing to really, really consider is, now, wouldn't it be great? I'm going to take a pie in the sky. Wouldn't it be great if during the divorce process, right, both parents, like, they could hate each other, but hopefully love their kids. And they work together to create a plan, right, a special needs plan for their child. Now, we talked about, leaving things outright. You could disinherit a child, meaning you leave everything to another child. You leave everything to a friend, a relative, or somebody else. And that's not a great strategy, because if you leave money to somebody else with the hope that they're going to spend that money on your child, well, hope is not a strategy.
Yeah.
And therefore the money, let's say $1 million came into your friend's world. That $1 million is supposed to be taken care of for your child. Your child gets government benefits because they don't have the money in their name. But that money is susceptible to creditors, predators, divorce, gambling, drugs, whatever it may be. So disinheriting a child is not a great plan. And the only plan that really works and stands up over time is the creation of a special needs trust, a third-party special needs trust. And wouldn't it be great if both parents could agree that that trust will be funded someday with life insurance? So imagine both parents said, okay, you know what? We want to set money aside for our child. We have to plan for 2 lifetimes. We're going to get maybe a first to die or second to die permanent life insurance. Permanent because it has to show up someday, right? Term insurance is awesome because it covers you in the short term. And as you mentioned, it's relatively inexpensive. In my mind, it's the most expensive because it will fall off your balance sheet someday. And if you have a 20-year term policy, you're 20 years closer to mortality, if you can even get it at all based upon change in your health. And eventually it'll go away. So if you fund a special needs trust or a special needs trust that is a life insurance trust, we call it an ILIT, right, which is an insurance, irrevocable life insurance trust, and you could do it on one parent or both of the parents, that money will show up someday. It has to. And imagine if $500,000, $1 million funneled into that trust for the benefit of your child. What a difference that would make for them.
Incredible. Would you prefer the third party, or because I know you mentioned earlier the first party trust? Is the third party the most advantageous for most people, or?
Yeah, it is, because it's created typically by the parents or grandparents. And the beneficiary on that could be anybody. The state doesn't claim Medicaid, payback from a third party special needs trust. The first party is typically used when money goes into your child's name. So if they earn too much money, they got to move it. If they get a lot of gifts, if grandparents decide that they're going to give the child money, but don't leave it into a special needs trust. Or maybe the child won a lawsuit because of a medical, condition at birth, right? When the money's in the child's name and their social security number, it needs to be moved out. And that goes into the first party trust, which is also known as a self-settled trust or a payback trust, meaning the state gets paid back. I'm talking about a third-party special needs trust funded with life insurance is a great way to plan for two lifetimes.
Awesome. And you
Yeah.
you brought up the concept of the ABLE account previously. Can you go back to that and share what that's all about?
Yeah, absolutely. So in 2017, under the Obama administration, they basically created an account called an ABLE account. And the ABLE account is very similar to the 529 plan account for college. In fact, it's also under Internal Revenue Code 529. And basically what it says is that a person with special needs under the age of 26, which is going to be expanded to, I believe, 46 next year, can move money out of their name or make deposits, or somebody else can make deposits into an ABLE account that they open. That money in an ABLE account, and that could also be used for alimony as well. I'm sorry, for child support, right? So we could put money in there as well, but there's a limit. It can only be $19,000 a year. It's based on the federal tax credit. It can be the money goes in after tax. It grows tax free. You could take it out tax free, and it can only be used for qualified expenses. Basically, almost anything to benefit your child with special needs. If not, then there's a taxes and 10% penalty. It is a great financial tool if your child has some financial, or you want to teach your child some financial responsibility, because they have the ability to do that, and limit the amount that you give them or they use. So it's also a really good tool there as well. The challenge is, or the negative, is that the payback is very similar to a first party trust. The state gets the right to get the money out of the ABLE account upon the passing of your child to pay back Medicaid. The other thing to think about is, let's say you started saving for your child in a 529 plan and your child's not going to go to college. You could roll their money or transfer it from a 529 plan into an ABLE account with no tax implication. It grows tax-free, and you can take it out tax-free. Again, just another tool that could be used in the planning process that, you and I need to help guide our clients on as they go through the divorce process. And more importantly, after the divorce process, when the lawyers leave because they're done making their money and doing what they do and going through the divorce process, I'm sure you experienced it. They basically leave a client with a 70 to 100-page document and said, "You're divorced. Now go get your money."
Yeah, and this is why, and you know this because you're a CDFA, just like myself. We call it transition assistance, right? That's where we're. I tell people all the time, like when your divorce attorney pats you on the back and gives you a hug and says, "Congratulations, you're divorced," and they walk away. In many ways, our job's only half done, because we have to go through the experience with that client and help them open up the right accounts and process the quadro and get the distributions and make sure they have the right accounts to hold the proceeds from the house sale, and how are they going to invest them, and how are they going to manage the cash flow, and what's their budget going to look like, and all the future financial planning decisions they're going to have to make. That's where we come in, and it's not all about just like calculating child support and alimony and helping them divide up assets. It's all stuff that comes later, right? I mean, there's just so much to it.
Yeah. Yeah, and this just adds a level of complexity to it that if you started thinking about it in the process, is make it part of the divorce process or make it part of the mediation or the collaboration process, right? Especially if you can somehow get the parents on the same page when it comes to the kids, right? The parents could hate each other, right? But if they focus on what's best for the kids, I think the best thing is creating an ABLE account or opening up an ABLE account, having a third-party special needs trust created that's a standalone trust, meaning it already has a IRS social EIN number. Mm-hmm. It's not funded, or typically not funded until one of the parents or both parents pass away, because we typically want to fund that with life insurance. Because what we discovered is most parents are going to pay for their child's lifestyle until the day they die. And that's why we're planning for 2 lifetimes.
It's incredible. There's just so many really good, powerful lessons that we've covered in just a short amount of time here today. So let me ask you this question. This is what I call the carte blanche segment of our discussion. Sure. Like, is there anything that you want to share? Any questions that I didn't ask you that I should have asked you? Anything that you want to leave as far as a last message, or maybe some things we overlooked in our conversation today that people need to hear.
Just focus on your kids. It should be all about the kids. Neurotypical, kids who have special needs. I think that, I've seen it too many times. Parents go through divorce. Parents hate each other, which is okay, that's why they're getting divorced, right? Think of the kids. How best to be able to provide support for them for their lifetimes, be able to leave a legacy, be known as a good guy. I know too many fathers, right, who don't do that. They don't do the right thing by the kids. And, putting a financial wedge in between kids at a certain age, they're not going to want to be with you anymore. They don't have to legally, right? And in this case, with somebody who probably lacks capacity, I think you'd want to take care of your children. So I would also find an attorney who specializes in this. I would work with a CDFA like yourself who can help guide people through the process of going through divorce. And again, the divorce process is only as good as the financial planning behind it, right? You get divorced, now what? Like you said, you get that big document, you take a highlighter, you put that action sheet together. I don't know about you, but I find that ex-spouses will speak to me. They won't speak to their ex-spouse. And just be a stand-up person. I've come across too many people who, you go through divorce is one thing. Just be a stand-up person for your kids. Yeah. That's all.
Divorce tends to change people, right? I mean, like the most noble people that you meet some days, and then they go through a divorce, and they're just like these totally different people because it's emotionally taxing, and like you said, they hate their ex-spouse, and next thing you know, I've seen all kinds of crazy stuff happen.
I'm sure, and then the parents, talk badly about the other parent to the kids, and there's a wedge there and financial wedge. Like, just focus on the kids. Get divorced. Make sure everything is set up properly. Make sure if you're the ex-spouse that you own the life insurance. You own the disability insurance. Now, here's one that's not ever talked about. What if, right, the income-producing spouse gets sick and they can't work? Well, typically there's disability income insurance. A lot of times group insurance through a corporation, maybe an individual policy, right? But believe it or not, there is divorce disability policies out there that exactly. I found out about years ago that just like life insurance, you're insuring somebody's financial or the ability for them to produce income for your family, right? Because that's what we do. We all go to work to produce income for our family. And when you get divorced, you have to produce income for yourself and income for your ex and the kids because you're paying, child support and alimony. Mm-hmm. Well, we got life insurance, which is just a financial tool to cover that economic engine. God forbid you pass away. But what if you get sick and can't work? 1 in 4 people, sometime in their lifetime, are going to get sick and can't work.
Yeah. So
there is disability, the divorce disability policies that you can own on your ex, pay for it. It's not that much money. So if they get sick and can't work, that you can get paid the alimony and child support that you're entitled to get.
That is incredible. We should do a whole show on just those like obscure things. I've been a financial planner for 20 years, focus on divorce, and I've never heard of this. It's incredible.
I found out about it 10 years ago. None of the attorneys know it exists.
Yeah.
So that's it. That's my story. I'm sticking with it.
It was great. Thank you so much, Mike, for being here with us today. I really appreciate it. Such good information. For those of you that are listening, this is such an incredibly important, often overlooked aspect of divorce. So for those of you out there with special needs families and special needs children that are involved in the divorce, some of the financial decisions that you're going to make during divorce will have lifelong impacts to you. So pay attention to this. Go back and re-listen to this episode, listen to it over again, because Mike just dropped so many amazing nuggets of information for us. And I learned so many things myself through this experience. So for our listeners who want to learn more about Mike's work or get in touch with him, visit MikeRingel.com. And if you're facing the financial complexities of divorce and want some clarity around your financial plan and your future, visit us at AllegiantDS.com. My team and I are here to support you every step of the way. Don't forget to subscribe to Broke Up, Not Broken for more empowering conversations. And until next time, we'll see you again.